Good morning, good afternoon, good evening. Welcome to Dan's Trades. Appreciate you coming back. As always, I am not a financial advisor. Please read these disclosures. Pause the video, take a look. I'm not a financial advisor. This is not financial advice. This is purely me looking at my trading and video journaling, if you want to call it that. All right, so today is September 17th, 2024. It is currently 11:22 a.m. my time. I'm in Central Time Zone, so it is in the lunch zone right now. I have a recording, as you see down here. I'm looking at the video player. This is the raw footage from this morning, so I recorded my trades. This is when I started Camtasia up, getting some markups up, and looking at trading the opening range gap model that I am creating for myself. Fine-tuning. So let's start the clock, and I'll talk a little bit about what we did here, because I didn't want to talk as I'm trading, so it's not the easiest thing to do. So you'll hear some background noise. The wife's watching TV in the background. I don't have my office door closed, so you get a little bit of background noise from the TV. So the idea here is to trade to the midpoint of the opening range gap, which is the black area seen here. 15-second chart, 1-minute chart, 5-minute chart, 15-minute chart, currently in these four quadrants. Looking to put a stop loss on, because I've done this research, and it can hit this area within a few minutes. Sometimes it hits it immediately. So I'm looking to take advantage of PD arrays and price move down into the opening range gap midpoint. So we see here my first execution. I have sitting here limit orders, stop loss, target profit of the midpoint. So we'll just take a look and see what happens. I'll talk over it as we go. 1-minute chart up on top, looking to mark up the first fair value gap, or what we have now referred to as first presentation. Happened on the fourth candle there. I keep losing where my little tools widget is, so you'll see me move around for that. So bearish fair value gap, 1-minute chart. Price is moving down, so I'm looking to potentially say, okay, I got a second fair value gap, so I mark that down. I move it down in a 1 minute, so I'm gonna move my entry just in case the price doesn't return to the first one. It could be a breakaway gap. So I get an entry in, immediately filled, and price immediately moves away. So I'd love to see that initial response to that price level. We're already 20, 30, 40 ticks into profit, so that's a good sign for me. I'm comfortable with that. We'll let that run. Look at electronic trading hours, what's happened historically, what do we want to aim for, potential swing lows. Normally I would just target 20 points. I am graduating and looking for holding for more, so that's what you'll see today. Now I'm looking at, my initial stop was there. I'm looking more as I see it. I see I got that. We got two fair value gaps, so I'm not crazy about that. I also want to look at my stop. I like 20-point stops, so I'm moving my stop to 20 points on the 5-minute chart over there, which also is above that fair value gap, leaving a breakaway gap potential above it. So I like that much better. Technically, I should probably move that right here, above that full candle. Let's see what we do here. I don't think I moved that one. I think this one moves a little bit. So there was a couple trades here. But I am definitely liking how it is respecting that. Good sign, stay in the trade. Again, getting that feel for holding for a little bit more instead of just the 20 points that I've done many times. So 20 points is 80 ticks. So if you see this move up to 80 ticks, that's where I would have traditionally taken off the position. I'm going to transition over to 2 contracts, which I've already started to do some of my trading, but I haven't recorded those just yet. Everything's a progression. So I could put on 2 contracts in the micros and leave a runner. So this is trading the E-mini, so that's why I just have 1 contract. Okay, we got over 100, so we're going to move to break even. Typically I would have taken my trade off there, so initial model would have been success, done, closed out. Nothing wrong with that. 100 ticks in a couple minutes is a beautiful thing. So I'm feeling like on the right side of the trade, liking this. I see another fair value gap on the 15-second chart. Took out the initial minor sell side there in this 15-second with that run, so price should retrace back in to get some more inefficiencies. Here's that fair value gap. We'll draw it in. Would like to see price maybe hit consequent encroachment, and then reverse, but we come right through it, so took out my stop. All right, we're stopped in profit. That's perfectly fine. So trade one closed out, minor profit. Not surprising to see it come back, but hey, we're up 100 ticks. The framework is working. So I'm feeling good about reading price. We're still valid. Midpoint of opening range gap has not been hit yet still, so I'm looking for where can I maybe get a re-entry here. If we tap that fair value gap again, right that, we'll take a second trade. Place my stop. Look for a target. If we just target that initial low, that'd be 112 ticks. So hey, maybe we'll look at that 20 points again, and now we're seeing what this PD array may change to. As you've seen, it is acting more like an inversion fair value gap right now, so I label it so, which would send price higher. So I was a little bit choosing my wrong labeling convention there. I was looking for it to be a bearish inversion fair value gap, which is incorrect, so you see that labeled actually wrong. If it was an inversion fair value gap that was bearish, it would be off an up close candle, so this is off a down close candle, so this should technically just be a reclaimed bearish fair value gap if that's the case, not an inversion one. So I think I do modify that again here, so let's take a look. Again, we're up 30 ticks, so we're liking at least where it is. Price is moving. I'd like to see some speed, so there we go. It is actually just looking to be a reclaimed fair value gap, and it's acting as inversion, so I just take it off. I don't want to confuse myself. It's not actually, looks like it's inversion, so I'm less liking this trade. Not in love with it. Do some measurements of that wick. If we close above CE there, I'm not going to be very happy. But we're staying below, so we'll stay with this trade for the minute. I'm finding very good use of wick CEs. All right, we'll draw that one back in. So that's a balanced price range over there. Sell side, buy side delivery. That's why I'm looking at this area. Now price should leave it, is what I'm thinking. We delivered down, we delivered up, price can leave now and continue lower, filling the midpoint of the open range gap for the model is the thought process. If it doesn't do it right away, I'm not happy about it. I'm realizing, yeah, I might have got in these trades a little bit early. It's only 9:42 right now, so we're moving up, and I don't like this. It is definitely still acting like an inversion fair value gap. And we're coming through that other one where I took my entry, so a little bit of drawdown there. Not in love with this trade. Feeling it might probably be early if we don't take a move like we like it. Do like that it's still respecting, looking where the bodies are closing. Nice move down. Again, 30 ticks to the positive. So price is swinging. So if it doesn't move right now, and I don't like, let me pause the video right here. So you see how this closed almost directly on and then opened directly on midpoint? That is a good sign that price could reverse. So I don't like that, which is exactly why I'm closing this position. Watch this 15-second play out. That's what's running through my mind right now. I didn't like seeing that. We could definitely reverse higher. Price isn't moving where I want it to. Taking a look at the 1 minute, 15 minute, 5 minute, just kind of scanning and seeing price isn't displacing like I want it to after that close and too much time right at consequent encroachment, so we're just going to close this trade. So I'm perfectly fine with that. Little time distortion happening. Let's wait for a better setup. If price ran away to my initial target, fine, I don't care. I'm not liking this time distortion though, so taking a peek. Let's pause this. We see the first two trades we are up, 265. I reset this demo account, so it's not bad for a day. Just in those couple tiny little scalps. So I don't watch the dollars, I just watch the ticks as you see in the tools. So I just take a quick peek. I'm like, all right, yeah, we're up a little bit. That's great. Enjoying some amazing coffee. If you haven't tried mushroom coffee yet, give it a whirl. It's much better than black coffee. Or I shouldn't say much better, but it's a good alternative. All right, so let's go back. I'm going to say, now I'm thinking, where's that first presentation fair value gap? And I'm also seeing right here, the top of this black area is the top of the opening range gap, so that's the price open. So I'm noticing that price is respecting that area. I'm not expecting and not anticipating price to go higher, so I'm looking to re-enter in my short idea, again, to trade to that midpoint of the opening range gap that we have not hit yet. And I know you hear ICT say it's a 70% chance. I trust his history data, but I also did my own back testing, and I'm finding a 76% rate of success in the past few months. Whether that means they're going to have a little bit less later, a little bit more later, whatever the data size is. So here I'm looking for my idea placement right there is immediate rebalance. I want to enter on a potential immediate rebalance, so we're tagged in right there. The price does come against me. I place a stop loss above this fair value gap on the 15-second chart, which is also the first presentation fair value gap. So we take a little bit of heat here. What do you got? 20, 30 ticks. I got it set at 58 right there. I'm going to take a look. Do I actually like where my stop is? Slight drawdown right now. Target set for midpoint. So there's the entry right at the potential immediate rebalance where I was anticipating. So that's why instead of the bottom of the fair value gap, just in case price did not return to it, I was entering on a potential immediate rebalance. And then looking at the 1 minute chart up here, and I'm also going to take a measurement of the wick right here. Keep an eye out for that. Take a look at the 15-second chart. What are we looking like? Looks like we could be in the market maker sell model, looking for entries, and there's move the stop to the top of candle number 2 of the fair value gap. That was the theory behind that. So I'm looking for PD arrays to protect my position. And nice response. And this is our breakaway gap. So I got a breakaway gap potential on the 15-second chart. And we also have the 1 minute candle See, the wife's watching TV over there. Live and in color. Coming up one more time, let's take a look. 5 minute chart over here. All the things in the way, so I want to get these out of my way. I want to be able to read price. I understand what he means now, and the stuff gets in your way. Notice how we are respecting consequent encroachment of this fair value gap. I love seeing that. That's a good sign. Even though we are still slightly underwater, I like how price is respecting those areas. If we do take a spike up, which I've seen many times in my back testing, I'm going to take a look and make sure I'm not in the line of fire. Wicks are up there doing some damage. Bodies are still telling the story. Where'd that tool go? Here we go. I'm going to throw a fib on the 1 minute candle. Look where CE is. And my stop. Perfect. I like that my stop's there. Oh, interesting. Back in the old days, that would have scared the shit out of me. Today, not so much. Still respecting. Prices in the lower half. I like that. Little stop hunt. I found that pretty interesting. I'll tell you what. That feels amazing to know that. Cool, calm, and collecting, drinking some coffee. See, amazing. Now we're coming up on our macro time. I should have waited for this initially. 9:48, 9:49, 9:50 starts the macro. I was going to try and draw out a 20-point thing, but price started getting more interesting, so I decided, hey, price is moving. We should not come back up here. I'm going to protect this position because we're about halfway to my target, so I'm going to reduce my risk. Move it to the bottom half of that fair value gap, as outlined. We got a couple volume imbalances in between there. I wouldn't be surprised to see price come back up and lay a body over first up close candle in this run. And we're at 80, 90 ticks, so I'm liking that I'm graduating into holding for a little bit longer position instead of just closing it out right there. So there's 2 times we could have closed out at 20 ticks, or excuse me, 80 ticks, which is 20 points. And I want to measure CE of this wick over here, because that's going to come in handy as well as price moves down to my target, which is midpoint of the opening range gap. Move the stop to profit. We're 3/4 of the way to my target, to terminus, so I'm definitely protecting the position. I would not want to see price go flying back up against me. Now it's just a matter of waiting, because we are in the macro window. Let's move it down more. Moved it to the open of that candle. Just my quick and dirty stop placement. And as I'm watching price, I said, nope, we're going to use that CE of that wick. So let's go ahead and move that stop right there. Because if price does go back above that, it's probably going to go higher, and I don't want to be any part of that. So I'm going to move it down to 150 ticks in profit should it go the other way. Now, obviously, there is a chance that slippage could go over, or it could just jump it, but not today, Junior. So 2 times I am absolutely loving what I have learned about stop placement. Thank you, Michael. Thank you, Jesus, for allowing me to learn these things and eventually help other people with it. Let's take a look and see what happens here. You see the 7 o'clock, that's the 7 o'clock opening notation, previous day's high. Those are all from free indicators for the ICT kill zones. You see the week open down there, which is a nice pocket of liquidity waiting for that for the week open. And then my target is literally dead center on the opening range gap midpoint, aka consequent encroachment of that opening range gap. All eyes are on the 15-second chart. I'm not even watching the other higher time frames because I don't need to anymore. We're just not even gonna move the stop. It is what it is. If it comes up and takes me out, if it goes down, that's where it is. I'm just enjoying my coffee. There's an immediate rebalance that I'm liking. That's right. Stay on target. Wait for it. Apparently my microphone wasn't recording very well because that sounded like garbled crap to me. Let's get a better view of this. $9:52 is our time, coming up to 9:53. Just in case it wants to run, I might take it up before it even hits my stop, but so I'm just randomly waiting. I'll close it out again. Loving this trade. That's a nice move, and now we can relax and just watch the magic happen. Thank you very much. I love it when a plan comes together. So remember, tomorrow is promised for none of us. Make sure you live for today. Make sure you're taking care of what you need to take care of. And trading with random luck. Because that's what it must be. If you haven't watched 2024, get on it. It'll change your life. Take care, everyone.